Hello and welcome to a brand new segment called My Simple Money, where we will try and help you understand your finances better. It's all about making complicated things simple. We really believe in having a healthy financial life, and so we want to try and help bring in some experts to help you understand the complicated world of finance. My name is James, and I have worked in financial services and personal finance for about 25 years now. So we're going to crack on with the show. The first topic we are going to try and tackle is mortgages, and I'm joined by the wonderful Kelly Greatholder. Hi, Kelly.
Hello.
How are you?
What a welcome. Thank you very much. I'm good. Thank you. Thank you for having me.
Pleasure. Kelly, you've been a mortgage advisor in the Stoke-on-Trent area for how long now? Is that a rude question? No.
It's not quite the same as how old are you, is it?
No.
Over 20 years, 23 years.
Great. Because you started in estate agency, financial services,
I actually started
didn't you?
as a financial advisor. 1997, I qualified as a financial advisor.
So you kind of know your stuff when it comes to talking about it.
You could say that.
Great. Well, we're going to dive straight in because everybody listening is probably wondering what we're talking about. We're talking about mortgages first. What is a mortgage?
Well, I guess a mortgage is one of those things that nobody really wants.
Right.
It comes from the Latin word death pledge.
Yeah,
Read into that what you like.
Yeah.
But basically, it's a contract designed to help you purchase property, much like a normal loan. However, property is put up as security or collateral. So if you don't pay the mortgage, the property is repossessed, and your terms of that contract are to pay that until that pledge is fulfilled.
So it's different to a personal loan then? It's not like you can just apply for a personal loan or a mortgage on an app in the same way you might do with a personal loan?
Well, with the way that financial services are going, I think there's plenty more applications that you can do through apps now, but the terms of it are, I guess, a lot more serious and a lot more repercussions, and it's something that shouldn't be entered into lightly.
So when you say collateral against your house, what does that mean?
So basically, a legal charge is put on your property, and there are conditions that have to be met before that charge is removed. So you can't sell that property until you've paid back the mortgage. And you'll hear risk warnings all over the place when you're looking at mortgages. Your home can be repossessed if you do not keep up your repayments.
Yeah, so it's quite a serious loan. There are consequences to it going wrong.
Yeah.
Great. So is it hard to get a mortgage then?
Not if you use me.
Right, obviously.
It can be really difficult. It can be difficult to navigate all the different options that are available. There are so many different lenders, so many different banks and building societies, and then the actual products that you can select are different rates, whether you want something that's fixed for a period of time, something that's more flexible. Very much depends on your circumstances. So I'd always recommend that you seek advice, whether that is from your own bank or from somebody like me who's an impartial broker.
It's funny, I was on a train yesterday coming back from Manchester, and there was a conversation behind me happening between two blokes. Clearly neither of them worked in mortgages, but they were offering each other advice, the kind of the chap down the pub type approach.
Yeah.
We've talked about how serious this is.
Mm-hmm.
The people who regulate mortgages, we call them the FCA, they insist that the person arranging the mortgage has some kind of license like you do, don't they?
Yeah.
So what's your license? What qualifies you to give this advice?
Like I say, I'm so old that I qualified many years ago before the mortgage advice qualifications came in the current form. But for most mortgage advisors, it's CMAP.
Right.
So, I've got the equivalent of that.
And that basically says that the FCA understand that you know what you're talking about, and so therefore you can.
Yeah, but I think it's more than that, isn't it? It's not just the qualification that you got all those years ago. It's demonstrating continuous professional development and making sure that you're up to speed with things. There's so many things that I have to do to demonstrate to the people that regulate me that I am on top of things and that I'm abreast of current product knowledge, thematic reviews from the Financial Conduct Authority. There's so much more to it than just a qualification.
Yeah, because you see lots of stuff in the news about rates changing and products changing and first-time buyers and 100%. I think there's so much information out there, particularly with us living in an online world now.
Yeah.
For those of us who work in the industry, it can appear baffling. So if you haven't got a clue about where to go, I think it is actually really important you seek out professional advice.
Yeah, I think so.
We work in finance, but if I feel ill, I don't ask my mate down the pub. I go and see a doctor, someone who knows what they're doing. So if let's say I'm a first-time buyer. Okay, I've never owned a house. I want to buy a house. I'm going to come and see Kelly because I've been told that you can get me that mortgage. What's that process going to look like? How are you going to get that mortgage for me?
So I guess the starting point is working out how much you can borrow.
Okay.
And to do that, we look at what your earnings are, what your commitments are, whether that be loans, credit cards, childcare commitments, other ongoing repayments. And then we look at the term over which you can pay that mortgage back. And we do a calculation as to how much we think you'll be able to obtain. But it varies so much from one company to another. Some are more generous with what they'll lend. And then, depending on the amount of deposit that you are able to contribute towards a transaction, some lenders will balance that risk by being a little bit more flexible and allowing you to borrow that bit more, maybe.
So if you put a bit more down...
Yeah, you tend to find that they're a bit more lenient because the risk for them is a little bit less.
What do you mean the risk for the lender?
The risk of you not maintaining that mortgage or them having to repossess the property and not getting the full value back. So you can imagine if somebody puts down just a 5% deposit, for example, and the house has to be sold quickly in order to repay the mortgage, there is a risk that it might not be sold for the full value and the bank loses out. If you can put down a 25% deposit, for example, that risk is far less.
And so you put down a bigger deposit, it's going to make it easy to get the mortgage. Does that affect anything else?
It affects the rate, yeah.
Okay.
So again, the rate tends to be balanced by the risk. If the lenders have got more of an appetite to lend, they'll make it more attractive. But the other thing that can have an impact as well is your credit score. So
Okay.
your credit
Talk to us
score
about
doesn't
that.
need to be quite so high if you've got a bigger deposit, again, because the lenders are that bit more lenient. But that's not to say that you do need a deposit. You know, don't get me wrong. There are many, many new options now where people can borrow the full value of a property in some way, shape or form.
Yeah, called the 100% mortgage.
100% mortgage. We've also got multi-generational lending where I've helped clients before take a mortgage with help from their parents. There's a few different ways that can be done. So I'd say if you're in the market to start looking at property, don't be put off by the fact that we're saying you need a deposit, because the time to start thinking about it is now and investigate your options.
I think with over recent years, particularly, houses have become so much more expensive, particularly in comparison to how much we earn.
Yeah.
That a lot of people, especially if they're renting, because rent is also really expensive,
Yeah,
and I feel for young people who are renting, and there's not an inch spare in the budget to be able to save for a deposit. But so many people in the UK, I mean, home ownership's a massive part of our culture, and it's a real goal for so many people. You mentioned one thing, and I just want to come back to it. When you talked about rates, you talked about fixed and variable. Now, I know that they're two different things, but for the listeners, what's the difference between a fixed and a variable, and why would you take either one of those options?
Okay, so there are different options within those terms, I guess. But in simplest terms, a fixed rate would be where your payments are a set amount each month and every month for a fixed period of time.
But surely that's the... Who wouldn't want that? That's the best option, right?
Somebody might not want that if they need a bit more flexibility. So if they think they're going to need to move quickly, if they're in a position where they might repay that lending more quickly, if they want to take advantage of interest rate reductions. There's talk in the market at the moment that interest rates could come down. And I've got some clients who say to me, I really don't want to fix in at the rates that they are right now, Kelly. If the rates come down, I want to take advantage of that. So they have a rate that is in simple terms variable, but what we call a tracker that directly is related to the underlying interest rates.
So if the Bank of England, as we see, announce that their rate is going to drop, a tracker would go down in line with that?
Proportionately, yeah.
So how do you work out who's right for which one?
I think it's getting to know your customer, isn't it? And getting to understand what their circumstances are, not only now, but how they might change in the future. So I've been lucky enough to help first-time buyers buying their first property, getting to know their budget, where maybe it's really important to have a fixed payment so that they can manage their household bills and their lifestyle around that. And then I've also got clients who maybe are starting a family and they know they're going to have a reduction in income for a period of time. So it might be just as important for them. And then I've got people who might have variable income. So they might earn bonuses, commission, they might want to pay bigger chunks off their mortgage at a time that suits them, and they might need that bit more flexibility. So I don't think there's any easy way of working it out. The most important thing is to know your customer or to get the right advice. Yeah,
absolutely brilliant. Okay, so how much does a mortgage cost then? Or does that depend on the rate? Are there fees? I mean...
Yeah.
Okay. Yeah.
That's not an easy one to answer, James. There's all manner of fees. So there can be an arrangement fee for the product that you're having, whether that be a fixed or a tracker rate, a variable rate. There can be some upfront fees for a valuation of the property for the bank or building society to decide that the house is suitable to raise a mortgage on. There can be some exit fees later on down the line, and the banks are really good at letting you know those up front now. So it's really clear when you go go to take a mortgage, if you have a proper illustration and you go through the process as you should, that you are fully aware of all the costs.
Yeah, I think that's one thing that is important about your industry, is that it's so well regulated now that actually you can't accidentally stumble into something with fees.
No.
A good advisor, I guess, would make sure you are going to pay this amount on this day, this amount on this day, here it is to the pounds and the pence, and it's all laid out.
That's it. Some fees are upfront, some fees are added to the loan. We're always careful to remind customers they might pay interest if they do add fees to the loan. That's not really the textbook answer, but every customer's circumstances are different. Some customers don't have the money to pay those fees up front, but they are in a position where they need to buy a property.
Yeah.
So we, again, tailor the products to suit them.
I think the thing for me is trying to help those people that might be, they might not have a lot of cash now, but actually home ownership would be ideal for them. It's going to help them build an asset. It's going to give them somewhere secure to live when they retire, because once you pay the mortgage off, well, the house is yours. There's nothing else to pay after that. You don't have to keep renting.
And over the last few years, we've seen innovative products that have been designed to help maybe renters who are already quite highly committed, not in a position to save. Products designed especially to help them get onto the housing ladder, really.
Brilliant. We're going to wrap up in a couple of minutes. Just one last question. Well, two last questions.
Okay.
You're involved. There's a lender involved, but I also know you need a solicitor when you're buying a house.
That's right, yeah.
So what is that bit, and why do they need that third crucial part?
So the solicitor's there to help make sure that the property is a suitable investment for you. And not only that, but to protect the lender's interest as well and make sure it's a viable investment for them. So there's a whole lot of information that they look into, what we call searches, information about the land that the property's built on. Is there any contamination in the land? Are there any mine shafts, particularly in this area?
Loads in this area.
Yeah, loads in this area. They look at local plans. Is there going to be a multi-storey car park built across the road from your property? Are there any restrictions on what you can and can't do on that land? So it's really crucial that you find somebody that you know that you can trust to do that job for you.
Brilliant. Okay, final thing then, to all the listeners, what are your top tips for getting a mortgage?
I think start the conversation as soon as possible. If your head is in that space, seek advice, understand what you need to do, how things need to look, take the right amount of time. It's amazing how many people in our industry we hear from who've put an offer in on a house and they call us up and they say, help, I've had an offer accepted, I need a mortgage. It's far less stressful for customers to get the right advice up front. I like to help my clients by putting offers in for them, by talking to them about when they've viewed the property and helping them decide where to pitch that offer. And in terms of all the other bits and pieces that you need, all the different people that you need to speak to, my job is a little bit like a wedding coordinator with a house. I can help arrange the solicitor, the survey,
and it's all pink.
The removals. Yeah, it's all pink and fluffy.
Brilliant. Because you work at a company called My Simple Mortgage, and they have an event coming up for first-time buyers on the 17th of July at Port Vale at 7 o'clock. So if there's any first-time buyers out there who are interested in finding out, and there's estate agents there, there's solicitors there, the team are going to be there.
Yeah.
I think Leak Building Society are going to be there, a whole raft of people to help.
That's it. Loads of free information.
Great. Perfect. Kelly, thank you so much for coming on and explaining that to us. If this has piqued your interest and you want more information, you can find us on Instagram. You can look us up. It is My Simple Money. And you can drop us a DM or send us a message and we can put you in touch with Kelly if you've got further questions. But thank you very much for listening. We'll be back with more helpful information on My Simple Money.